Hey guys, welcome back. I just did a video on my Wealthsimple portfolio, focusing mostly on the Canadian side of the portfolio. In this video, I want to go through the US stocks that I own in my Wealthsimple portfolio in a USD account, and just kind of talk about how that overall portfolio has done overall in terms of performance. We can go through when it started, where we are now, and then go stock by stock and kind of take you through the holdings I have in this particular portfolio. If you like this kind of content and seeing the portfolio like this, please subscribe to the channel. I'll have a lot more videos like this, as well as, earnings review, stock analysis, stuff like that. Would love to have you and engage with you in the comments as well. And if you own any of these stocks as well, would love to hear from you as well, get your thoughts why you own them. If you're concerned about anything in particular or reasons that you want to continue to hold the company for the long term. So we will just get into it. On the USD side, so as you can kind of see in this particular account, the Canadian side has a lot more money in it, mostly because most of my portfolio, or more than half of my portfolio, is in Canadian stocks for sure. And then in addition to that, in the prior video, you kind of saw the Canadian portfolio started in 2020 in this account, whereas the USD aspect just is about a year old. In terms of why, to be honest, it's literally because that's when Wealthsimple enabled us to have USD accounts and pay for premium accounts where you can have a separate USD account. So I do have a separate USD account on another brokerage that I've had for many, many years, but I've only had this account here for a year. And given the overall performance of the market over the last year, I'd say we've done pretty well. We're up 10% in terms of absolute value since Feb 28th. So we've performed really well, and part of that I think has just been since less of the capital was put in during inflated times. I've kind of got the benefit of being able to buy some dips, and we can go through some of that as well. But overall, just happy with the overall performance. You can even see, which is interesting, I was down a couple $1,000 in terms of unrealized returns up until January, where it kind of broke even, and then since then, as the market's ridden up, I've been able to drive a 10% return essentially in the last month. So I never even looked at it that way, but it's kind of crazy when you look at it that way. In terms of, how I view overall performance here, I mentioned it in the prior video too. If you haven't gotten a chance to look at that, would love for you to watch that one. But I'm not really an investor that like trades too much or anything like that. So I'm really looking for, if it's stock price appreciation, hopefully that's because just the EPS and the revenues and the operational aspects of the companies have improved, which will lead to more stock buybacks, more dividends, more ways to return capital to shareholders, which is really what I'm looking to drive long term. Would love to, continue to drive my income growth from my portfolio over the long term. Now, on the US side, there's been some instances where I've invested in stocks that don't have dividends, and in those areas, if the stock runs up a lot and I don't think it's a strategic focal point for the portfolio, I may sell out and take a big profit, so then I can reinvest in dividend stocks. But generally speaking, I don't pay too much attention about the overall performance from a capital appreciation standpoint. So I'm done rambling. I will go into the portfolio here. The first stock I have here is Google. I own Google in a bunch of accounts, and I just started buying it in this account as the price has, gone down. Many factors, interest rates going up, lots of privacy issues, regulation issues, ChatGPT potentially coming in and giving Microsoft, the opportunity to steal some share on search, as well as just advertising being in a bit of a recession in terms of the amount of people that are and companies willing to pay for digital advertising right now. So I am down about 5%, it looks like. but this is a core holding in my overall portfolio, and it's one that if it continues to go down, I wouldn't mind allocating new capital to it, even though it doesn't pay a dividend, because I have like a long-term horizon. So if it doesn't pay a dividend, but I think it has a good opportunity for the business to improve its operational performance, and hopefully that delivers share price appreciation over the next 5 years, 10 years. It'll be a point down the road that I can look at exiting the position and fuel dividend growth at that time. So I still see an opportunity here. I still want it a part of the portfolio, even though it's not necessarily paying me today. I think it has an opportunity to get me a good capital return, which can turn into dividend income down the road. KO. So Coca-Cola is actually a stock that I just bought over the last couple days. Very small position, or 20 shares, about $1,000. It's one that I honestly think is too expensive where it is, but it's a company that I think is a great business, great company, and I'd love for it to go down more so I can average down and kind of build out a more meaningful position for myself. If it goes up significantly from here, I'll probably just dump it and take a short profit, just because I'm not going to build a big position in a company that I think is extremely overvalued. But I've struggled with this one for years, wanting to get in. I finally have a huge amount of cash on the sidelines, mostly from selling my Airbnb shares after earnings. So I decided to, it's a good time to throw $1,000 in KO. If it goes up, I'll make a return. If it goes down, I can start building out a position there, and add another dividend king to the portfolio. And I'm kind of laughing at myself because after giving a spiel on the type of investor I am, the first two stocks are non-dividend paying stock, as well as a company that I'm essentially considering trading depending on what way it flows. So these are more atypical situations for me in terms of my investment portfolio. Going into other opportunities and maybe a more core stock that I've owned for a long term across many accounts. McDonald's is a great dividend paying stock, great business, very defensive, very expensive from a valuation standpoint. So I think they're planning on doing about $10 of EPS this year. So 26, 27 times forward looking earnings. I really haven't been buying this stock much lately. So I'm probably up. I thought I'd be up even more, but up about 15% here. Pretty small position in this account. But it's a company that I love for the very long term. They're buying back shares. They increase the dividend every year. But at this value, I just don't think it's like a great opportunity for new capital to increase the size of that position. Meta, I own Meta in other accounts. You can see I'm up like 70% here, just because I started buying some more Meta when it literally was going down to like $80 a share or something, ridiculous. If you just carve out the media side of the business, it was trading at like 8 times or 9 times after you back out cash. So I just put a couple or about $1,000 into it. It's gone up 70%. And Facebook's one that I've owned for years and years and years. I have a lot of thoughts on the company, the direction of the company, what's good about the companies, what's bad. But I'll try to not go too out of the way. It is a stock that I continue to hold for a while, and I hope that they just, display better operational discipline in their capital allocation strategy to maximize it for shareholders, and, realistic on what they can achieve. Microsoft's a stock that, it's funny, I was talking about Coca-Cola, but Microsoft is a position that started like that, where I could not get over the valuation. Probably when it was at about $110, it just, the PE didn't make sense, but I love the business. I love the potential growth of the company. So I played it very similarly, where I just did small investments. As the stock dipped, I'd invest a bit more. Now Microsoft across my accounts is a pretty big position for me, and I'm up huge on it in some of my accounts. In my initial account and my initial buys, I'm up over 100%, even after the 20-30% drop we've had here in this account. It's more recent buy, so up about 10% despite the drop. So can go into Microsoft very deep as well, but that's a stock that I love, great business, also pays a dividend, grows it pretty aggressively every year. So obviously not as big of a dividend payer as some of my covered call ETFs and stuff like that. But it's one that I count on for dividend growth over time. And, hopefully 10, 20 years from now, my yield on cost on what I'm buying now is pretty good. P&G, very similar story to like Coca-Cola or something. Good business, very stable, relatively defensive, increases the dividend every year, and just like compounding the dividends that I'm getting paired with the dividend growth, I think is a good formula for long-term dividend income. So I like having it in the portfolio. This one here, the Schwab US Dividend Equity ETF, very similar to KO, is a stock or an ETF that I've parked money in before when I just have too much cash on the sidelines and I also want to participate in the market, but I don't know exactly what to buy. So it's just a dividend ETF in the US market. Just put, $700 into it. But we'll probably eventually end up taking that out and putting it somewhere within my portfolio when valuations become attractive in a particular spot. AT&T is a stock. I know it's it is what it is in terms of how disappointing they've been over the last number of years. But like when I step back and look at the business, they're going to do $2.50 of EPS in 2023. They're going to do 16 to 17 billion dollars of cash flow, and the market cap of the company is 136 billion. So we're trading at 8 times earnings, 8 times cash flow. They pay a 6% dividend, and then they pretty much have another 6% of their market cap to buy back, not buy back shares. Please don't do that, but to buy back debt and de-lever the company a bit, because that's been one of their big problems, as well as investing in growth opportunities. They have some businesses that are obviously not positioned well for growth. They have an interest in direct TV still, even though they divested part of it. They have interest in other type of cable exposure, but they also have a really big wireless business, a really big internet business that should do well over time. So I get it. It's being weighed down because of some of the exposure they have, but I think some of the exposure they have to, positive markets and segments in telecom as well are being overshadowed a bit in the valuation. So I'll take my 6% dividend here and, continue to either reinvest it if the price goes down or invest it in other areas. And hopefully with the other 6% of the cash flow that they're keeping, they can reduce debt or they can fuel growth in other ways to, hopefully increase the dividend over the long term. But this one has been one that, frankly, I've lost money unrealized, but I'm down overall, even if I look at the dividends being reinvested, since I do own this in some other accounts as well. So definitely not a winner for me so far. And then the last one today, I did a separate video on Visa. I can put it in the description, but Visa is a stock that I'm looking to add a lot to in 2023. Unfortunately, it's run up a lot already. I think when I did that video, it was at about $205, so it's up about 10%. But I think Visa is a tremendous business, trades at a relatively high PE. I think this may be even higher than it's trading at. I think the forward P is like high 20s. But ultimately, I think this is one of the best businesses in the world. Super lean, has a lot of scale, has a lot of secular growth, global, benefits from increased cross-border, increased travel, just people using less cash and more card over time. It's just so many growth trends, so many different ways to grow the business, and they are extremely disciplined in returning capital to shareholder through buybacks and dividend increases. So love the business. Similar to Microsoft, it's one that I count on, not so much for the dividend today, but hopefully as they continue to grow the dividend, grow their EPS, buyback shares, it's a great compounding effect for 10, 20 years from now in terms of what I'm going to be getting paid out every year from Visa. So yeah, these are the US companies I own in this portfolio. I do have a lot of cash. I do not have, if you watch my Canadian side of my portfolio video, I do not have an ETF to park this cash in that just pays me out an interest rate, unfortunately. So I'm looking to deploy it in other ways. Hopefully, the market trends down a bit and gives me better buying opportunities. But most of this was from my Airbnb position, which I thought the company after earnings trading at high 30 multiple. Love the business, great company, great business. I just thought it was trading a bit rich, so I dumped out. I also may want to hold this for a bit in case something happens in Airbnb, it goes back down. Once again, I'm mostly not a trader, but I feel like I do, as I'm self-reflecting in this video, have some more trading tendencies than typical when talking about my non-dividend paying stocks, because at the end of the day, I'm trying to leverage these to grow capital so then I can eventually later in life repurpose them to dividend paying. So as I saw Airbnb go up 50% in 60 days and up to a 40 future PE, I love the business, would love to own it, but I'm not going to own it at that valuation when I have AT&T in my portfolio trading at 8 times earnings, paying me 6%. If you kind of see what I'm getting at. So hopefully it's a better buy-in point. But for now, this is my USD and US stock portfolio within my Wealthsimple account. And I hope you guys enjoyed this. If you own any of these stocks, let me know. I'd love to talk about it in the comments. Or if you have any, thoughts on my USD portfolio I'm sharing here, would love to hear about it. And yeah, would love if you guys subscribe to the channel if you like this type of content. Let me know what stocks you'd like me to talk about. Would love to look into some new stocks as well if you guys are interested. And I'll see you guys in the next one.